Good afternoon. It's Friday, the 15th of October 2010, and the market's been closed for a bit here. Wasn't really in front of the machine today, but had a chance to take a look at what we had here. And the market continues to be very impressive with its resilience to any news. For the week, we did close above, and this is something interesting. We did close above the flash crash recovery high, and a lot of people have been looking at this area as what should be resistance. It's a potential resistance level, just like any other level that we've seen, on the way up here. That these are just kind of stopping grounds to see, will the buyers continue to hold on, or will it in fact turn lower? Well, when we have a rising 10, 20, 50, 200-day moving average, the odds suggest that the market trend will continue higher, or if we don't continue higher, that a correction through time is more likely than a sharp price pullback, that we generally have a lot of time to see that set up. And right now, when we look at the intraday stage time frames, we still see a strong market above a rising 5-day moving average. We look at that, here we've got a 5, 10, and 20-day moving average. It's just a nice pattern of higher highs and higher lows, and prior resistance levels acting as support as the market stair steps higher. So going into next week on the S&P 500, early on, we're going to see that about 116.70 will be the important area for the SPY to hold above, and otherwise it looks like it's destined for a move up to the highs for the year. At some point, maybe in this fourth quarter. The Nasdaq certainly has been outperforming in this market. The Nasdaq, that is up at new highs for the year. And we go back several years, we see that we've taken out what's been an important level here for the last 2.5 years at this about 50.5 level. So based on strength primarily in Google, and then which was up 60 points today, and also Apple, which was up, just continues to be a juggernaut. That's what's really pushing this Nasdaq out to these highs that we haven't seen, since 2007. I don't know why that says 2006 up there, but the 2007. So the next level of potential resistance, and it's only potential resistance. People were shorting against this 50.5 level, saying, "Hey, there's resistance." We only know in hindsight what true resistance was. Until the market halts and turns away from a level, it's only a potential area of resistance. And in the Qs, we now have the next potential bigger target up near about $53, and that's only $1.50 away. So we're talking about just 3%. Again, here, this market, the Nasdaq, just a real steady pattern of higher highs and higher lows with prior levels of resistance offering support. So early next week, I think that 50 is going to continue to be an important level for this market. And it's funny that we've seen so many people calling a top this week in particular in the SPY, saying, well, it's up at certain, at this post flash crash high. I don't know why I have so much trouble saying that. I wish the flash crash would just go away. But anyways, we had a lot of people calling a top up in this area. There's no signs of anything topping in here. Today we gapped up and pulled back a little bit, but the market stayed above the volume weighted average price on a closing basis, and it was a pretty quiet session back and forth. But there continues to be incredible opportunity in the individual names, and as we are in earnings season, the number of earnings reports really begins to pick up next week. The one real sore spot for this market, and what really continues to be impressive, is the financials. It's impressive because the market continues to rally without the financials, and a lot of people are still calling this the group to watch. And basically, it's been the group to watch, do a whole bunch of nothing since mid-May, when it got into this range that it's been in. Now it's back down towards the midpoint of that range. It's near that 50-day moving average, and it's just kind of, unless you're trading on shorter-term time frames, it's the financials continue to be a waste of time. You look at the weekly time frame, and it's ugly. It just does not look good, but it's right now it's only important if you're trading financials. It hasn't been important to the rest of the market, and that's what really is the hallmark of a strong bull market, is being able to ignore weakness or negativity in a large important group like this. It doesn't mean the financials do not matter. They definitely matter. They should continue to be monitored. And if we break down through this midpoint level, really below 1420 next week, then it might get the overall market's attention. But if you're going to trade the SPY, you trade the SPY based on what the SPY is doing, not based on what the financials are doing. When the SPY starts breaking down, then you get short the SPY or long the SDS, but not when the financials are doing it, because as we've seen, this market can and has rallied quite strongly without the participation from the financial group. So the Russell 2000 also, broke the 68 level and just continues to march higher above that rising 10, 20, and 50-day moving average. This week we've seen that it's come up to this little gap area, not quite up to the highs from post flash crash, but that seems inevitable up here at about $72, and let's take a look at that together and see what that high is. $72.10, and if it can blast through there, then it continues to look like a bullish move on the weekly time frame, that perhaps we're going to go see a test of the highs for the last couple of years, similar to the way that the Nasdaq has done that. So impressive strength really overall in this market, in a lot of different groups. The gold was down $1.07 today, but last week everyone was calling this big outside candle down on big volume the top, and again, just picking a top is a fool's game. It's really difficult, especially based on one day's action. That's not the way. Tops take time to form. They don't occur in one day. There's always some point where you can go back on a chart and point to it and say that was the ultimate top, but trying to catch it, you're gonna encounter many false moves prior to that. It's similar to the pathetic action in the UNG, which just continues to hit new lows on every single time frame. You look at the UNG, for a year and a half, 2 years, people have been saying natural gas is down too much. It looks like it's sold off. It's this and that. It's a value, whatever. The fact is, though, it's in a strong downtrend. It remains guilty till proven innocent.